Is the Silicon Valley real estate market heating up or cooling down? In September 2025, the answer was yes, to both. On one hand, mortgage rates hit a multi-year low, the Federal Reserve finally cut its benchmark rate, and a massive wave of AI-driven wealth began flooding the region. But on another hand, headlines about a slowing market persist, and some homes are sitting longer on the market than they have in years. These signals seem to point in completely different directions, and if you are feeling confused, you are not alone. But there is a clear story unfolding beneath the surface, a story of markets split in two very different paths. Understanding this split is the key to making a smart move, whether you are buying or selling. Stick with me, because in this month's deep dive, I'm going to break down the numbers, explain the powerful economic forces driving this divergence, and give you tailored, actionable advice based on what's really happening on the ground here in Santa Clara and San Mateo counties. Let's get straight to the latest data, September 2025, here in Silicon Valley. I'm looking at Santa Clara and San Mateo counties combined. First, let's talk about prices. The overall median sale price ended at $1,630,000. That's a healthy 4.5% increase compared to the same time last year. But this is where our story begins to split. For single-family homes, the median price climbed 4.1% year-over-year to $1,978,000. In stark contrast, the median price for condos and townhomes actually declined by a significant 7.7%, down to $955,000. Next up is the market activity. A surge of new listings hit the market as we entered the fall selling season. A total of 2,145 homes were listed for sale, which is a 5.5% jump from last year and a huge 27% increase from the previous months, August of 2025. Again, the story splits. New listings for single-family homes were up by nearly 7% year-over-year, with 1,543 new homes coming to the market. But for condos, new listings actually dropped by 3%, with only 602 coming to the market. So, how many of these homes are actually selling? In September, 1,463 homes were sold across both counties, up 6.3% from last year. The single-family home market drove this growth with 1,078 sales, a nearly 11% increase from last year. Meanwhile, condo and townhome sales fell by over 3%, with only 385 units sold. Finally, let's look at the market pace, or median days on market. This tells us how quickly homes are going into contract. Overall, it took 14 days, just slightly longer than 12 days we saw last year. But the difference between property types is dramatic. For single-family homes, the pace was swift, increasing just by 1 day from 11 to 12 days. For condos and townhomes, however, the market slowed significantly, with the median time on the market jumping from 18 days last year to 28 days this September. This means condo buyers have much more time to think and negotiate. So the data clearly shows two different markets. Single-family home sales are strong and getting stronger, while the condo market is facing headwinds. To understand why, we have to look at the biggest economic story of the month, the Federal Reserve. On September 17th, the Fed executed its first interest rate cut of the year. While the cut itself was small, just 0.25 percentage point, its psychological impact was enormous. For the past 2 years, the market has been defined by the relentless upward march of interest rates. Buyers were paralyzed by uncertainty, constantly wondering how high the rates will go. This rate cut effectively slammed the door on the era of anxiety. It was a clear signal from the Fed that the aggressive tightening cycle was over, and the further cuts were likely on the horizon. This single action fundamentally shifted market sentiment from defensive to opportunistic. In response, mortgage rates, which had already been trending down, reached their lowest level in over a year, hovering around 6.1 to 6.3%. This unlocked a wave of pent-up demand. Buyers who have been sitting on the sidelines, priced out or scared off by volatility, suddenly had a green light. We saw a surge in mortgage applications as buy now, refinance later strategy became the validated game plan for thousands of hopeful homeowners. This renewed confidence and improved affordability provided the fuel for the fall selling season to ignite, especially in the single-family home sector. But if lower rates are bringing buyers back, why are we seeing such a dramatic split between single-family homes and condos? Why isn't this rising tide lifting all boats? The answer lies in a second, unique Silicon Valley phenomenon that I'm calling the Great AI Reshuffle. While the Fed's action sets the national stage, our local economy is writing its own script. The third quarter of 2025 was a record-breaking period for venture capital funding, and it was almost entirely driven by artificial intelligence. An incredible $45 billion was invested into AI firms, with the vast majority of capital flowing right here to US-based Bay Area-centric companies. This is creating a powerful AI wealth effect. The Nasdaq is up over 40% in the last half a year, and employees at these high-flying AI startups are seeing their equity compensation skyrocket. This isn't a broad tech boom like we've seen in the past. It's a highly concentrated capital injection creating a new class of extremely well-compensated buyers. These are the buyers who can confidently compete for multi-million-dollar single-family homes in prime locations. At the very same time, more established tech firms have continued targeted layoffs, often citing rise of AI and automation as the reason for improved efficiency. This creates a split labor market that directly mirrors our split housing market. While there is intense high-paying demand for elite AI engineers, there is softness and uncertainty in other parts of the tech ecosystem. This paradox is the key to understanding September's market. The AI wealth effect is providing the high-octane fuel for the premium single-family market, driving prices up and keeping competition fierce. Meanwhile, the broader affordability challenges and job market uncertainty are weighing more heavily on the condo and townhome segment, which typically serves first-time homebuyers and those with more modest budgets. So, what does this all mean for you? Your strategy must be tailored to your specific situation. For single-family home sellers, this is your moment. You're in the strongest segment of the market with low inventory, high demand, and a confident pool of affluent buyers. This is a prime window to maximize your return. However, these buyers are also incredibly selective. Success hinges on impeccable preparation and strategic pricing. The homes attracting multiple offers and selling for well above asking are the ones that are turnkey and perfectly presented. Don't cut corners on getting your home ready for the market. For condo and townhome sellers, you need to be realistic and strategic. You are facing a market with rising inventory and cautious buyers who have the luxury of choice. This is a buyer's market, and they have the negotiating power. The biggest mistake you can make is overpricing your property. Work with your agent to price it competitively from day one to attract immediate attention and to avoid the stigma of sitting on the market with multiple price reductions. For single-family home buyers, prepare for competition, but don't be discouraged. The good news is that the Fed's recent move provides a buffer against the risk of runaway interest rates. This is an opportunity to lock in a purchase before prices potentially appreciate further in a low-rate environment next year. To find value, look for properties that may have been on the market for a few weeks or that need minor cosmetic updates. These homes often get overlooked by buyers seeking instant perfection, and that's where your opportunity lies. For condo and townhome buyers, this is the best buying opportunity you've had in years. The tables have turned in your favor. You have a growing selection of homes to choose from, more time to perform your due diligence, and significant leverage to negotiate on both price and terms. If you've been struggling to enter the Silicon Valley market, this is your window. It's the most accessible entry point to homeownership we've seen, offering a chance to build equity for the long term. Here is the bottom line for September 2025. Our market continues to be split in two. The single-family home market is being supercharged by a powerful combination of falling mortgage rates and a concentrated boom in AI wealth. It's a fast-paced, competitive environment that strongly favors sellers. At the same time, the condo and townhome market has shifted to favor buyers, creating a rare window of opportunity with more inventory, less competition, and real negotiating power. Your success in the months ahead depends entirely on understanding which of these two markets you are in and tailoring your strategy accordingly. Navigating this complex, two-track market requires a clear strategy and expert guidance. If you are trying to figure out your next move and want to discuss how these trends impact your specific goals, I'm here to help. Please schedule a complimentary consultation. All my contact information is right there in the description below. Thank you for watching, and I'll see you next time.